Sector picks as Managing Director of Investments for EP Wealth Advisors, Adam Phillips. Did you see what I did there, Adam?
I like that. Good to be with you, Liz.
Okay, let's put some gowns on the best dressed sectors right now. What do you think is really poised for opportunity?
Absolutely. Well, you know, the nice thing is that we came into this Middle East conflict in really good shape. We were neutral in terms of our overall equities exposure. We had a focus on quality and a tilt towards value, and that remains the case right now. How are we expressing it? Two sectors that we really like are industrials and energy. Energy obviously outperforming right now for well-known reasons. Industrials. You actually showed something a few minutes ago that showed how a lot of the airlines, transportation stocks are really taking it on the chin here amid this conflict. But it's a really diverse sector. And so there are other ways to play a lot of really interesting themes right now, like automation, robotics, this whole idea of onshoring or nearshoring within the industrial sector. So that's another sector that we really like. And I will just highlight the fact that, yeah, energy is certainly leadership today over the last few weeks, but energy and industrials are two sectors that were outperforming for a long time prior to this conflict beginning, actually outperforming over a 3- and 6-month basis.
Lately, there's been a little bit of a tilt, a bit more to the bearish side on behalf of investors. I've seen a couple of surveys that say investors are getting jittery, they're a little nervous, understandable considering we're in the middle of a major conflict in the Middle East. But is that really the best time for people to start hunting and pecking for these opportunities? But also at the same time, we cannot forget the Federal Reserve. The Federal Reserve is not expected to cut interest rates on Wednesday when they make their announcement. And they're not expected to even give a 50% odds of that until September. How do you play that against what is out there to buy?
Yeah, that's right. Those expectations have been pushed out quite a long ways. I will just note this Wednesday's meeting is going to provide us with the updated summary of economic projections. So we'll get a fresh look at what the Fed and underlying participants are thinking with respect to economic growth, the unemployment rate, inflation, and obviously policy rates going forward through the dot plot. But right now, a lot of clients are asking us, they're saying, what do we do right now? And we're telling them, for the most part, stay the course. I think what is so tempting in periods like this, when you're living headline to headline, is that you want to make changes to your portfolio. And I think ultimately that might make you feel good. It doesn't necessarily mean those are the right changes. And what makes it so hard right now is that this situation is so fluid. We're in the dark. We're in this fog of war, just like the Fed. And so the range of outcomes are so wide on both sides. And so right now, we are telling our clients that we want to maintain a focus on that 12 to 18-month horizon. That is what ultimately guides our positioning. And we are of the belief that this will remain relatively short-lived. There's always that risk this turns into a prolonged conflict. But we do believe that eventually we will return to that pre-conflict trend.
Well, there's the bell. Adam, much appreciated. Thanks for coming on.